Good afternoon, everyone tuning in for the webinar this afternoon. If I could just quickly ask, if we could just get a raise of hands just across the board, just so everyone can hear me, you can see me, and you can see the presentation in front of you. Oh, excellent. Perfect. That's about 50 hands up very, very quickly there. So good. Glad everyone can hear me. Thank you all again for jumping on today to be part of this and listening to today's webinar. The webinar today is part of a series of webinars that we're going to look to start holding here at GetGround about different investment locations, why we're looking at them, what's really going on there, and just showing a lot of investors in the UK and across the world about different investment opportunities and different investment zones across the UK and how they can really benefit us all in terms of getting top quality investments in some of the most exciting regions of the country that are providing really, really strong returns. So yeah, just to reiterate on that, thanks very much everyone who's jumped on their lunch breaks today in the UK, and a lot of investors we've got across the world who have also jumped on. So what I'm going to do to start things off, so the first slide I'm going to move on to now is just a bit of an introduction really about us here at GetGround, a bit of an overview about who we are. I know a lot of people that have tuned in today haven't actually spoken to us yet at GetGround, so it's a great opportunity to understand who we are and what we actually do here. So we have designed our organization here to be, in theory, an all-round 360 aspect of investment to help any investor, whether in the UK or based anywhere around the world, to get a full, flexible service when it comes to investment. You'll notice straight away, we've already transacted over £1.2 billion worth of property here in the UK, and we have over 20,000 active customers that we're dealing with, and offices in the UK, Hong Kong, and Singapore. So we're really sort of growing things here. So it's great to have a lot of existing clients of ours already tuned in today, and also a lot of sort of prospective clients of ours jumping on as well who haven't spoke to us yet. So what I want to move on to then is actually what we do here at GetGround as an initial point. So as I say, a lot of you haven't dealt with us here previously. So we have three main branches of our organization here at GetGround. We have our GetGround search team, which is part of the team that I work on, and following up from today, you can book in for a consultation with myself personally or one of my colleagues, where we will work with you one-to-one to actually source, find, and line you up with the best strategy and the best investment for you to achieve the goals and targets you're looking to set out. We have our mortgaging team here, so we can assist you with any sort of financial needs that you need when it comes to actually buying the properties and transacting on property. And then our GetGround company team here as well, just to really assist with that of being the most tax efficient investors. I think, it's a real key thing when we're looking at investment. It's not about what we make, it's actually about what we can keep as well as that when it comes to making our returns on investment. So bit of an introduction there to for all of you into ourselves here at GetGround. So moving on, the next slide then is myself here. So who am I? My name is Scott Dixon. I'm one of the senior property consultants here at GetGround. In terms of experience in the market, I've dealt with a lot of different organizations, a lot of different developers, a lot of different agents across the market, across the UK, transacted on a lot of different types of investments with investors all around the world. So I'll be here, as I said, at the end of the meeting today. You'll be able to book in for a meeting with myself personally or one of my colleagues. All of us very much in hand to help you with your strategies to actually grow and assist with growing and developing on these property portfolios that we're all looking to do. So now we get on to actually what the main part of the presentation is about today and what you're all here to learn about. So what we've done is we've put together a presentation about why we should be looking at regions like Birmingham, why we should be looking at these real investment markets across the UK. So we put together the top 10 things that we believe you need to know about Birmingham as a landlord to be as efficient as possible when it comes to actually buying and actually then investing into this particular market. So we'll move on to the first one. So reason number 10. One of the main key reasons why Birmingham has shot up and done so well in the market is primarily due to its location. It's one of the most strategically located regions in the UK. We're talking West Midlands-based city, connectivity across the whole of the UK. And with further things we're going to touch on later on regarding rail systems and connectivity across the whole of the country, it's massive. I think one of the things that really sparked to me was the population of Birmingham. You look at a region there, which is the second largest population in the UK. And when we look at key factors of that, one of the most interesting parts about that is when we look at an area and how it's growing, is to do with retention rates at universities and students in these types of markets. It's got one of the best retention rates. So I was actually looking just previously to today's meeting, around 49% retention rates from students staying in that market. And when we look at wanting to see a market develop and grow, that's one of the first things you should be looking at when looking at what makes a market one for the future. And it's the next wave of generations coming through, going to university there, as we know, one of the best universities in the country. And then secondly, actually wanting to stay, base themselves around there, build careers in that market. It shows how the drive of business is moving out of the southeast of England to these other markets. And we can see how that's really developing and growing, and a huge part of the levelling up procedure of the UK. You also see there on the screen, we've got some major organisations based in Birmingham: Typhoo Tea, HP Sauce, Cadbury's, massive organisations that are UK-based organisations, and also being directly located with Birmingham International Airport. It's the third largest outside of London in the UK with worldwide travel. So yeah, another real sort of key part there. So, and then what we want to talk about is the connectivity. So what we already know is how easy it is to commute from Birmingham to that of London. Myself and some of my colleagues have actually been to Birmingham recently, had a good walk around, really seen and really sort of taken in the area and seen that. And less than an hour and a half as it stands right now from London, where we're based, straight into the centre of Birmingham. That, alongside the HS2 system getting put in place, which is actively being invested into right now, is going to drop that to less than an hour. Funny sort of thoughts on that. A lot of our investors, and some of them have tuned in today, are based out in regions like Hong Kong, for example. And one of my clients in Hong Kong actually mentioned that wherever he has to go in Hong Kong, it's at least 4 hours. So any sort of connectivity that's an hour less, they're absolutely flabbergasted by how efficient that is as a route. And it's just going to help to grow and increase that demand for Birmingham as a city moving forward. And then reason number 8. So when we're talking about the economy, okay, looking at Birmingham's economy and how it's actually growing, it's one of the top fastest growing in 2023. What we've actually seen there, and straight away, I think a picture paints 1,000 words in a lot of things. You can see there how well across the West Midlands Birmingham has done in comparison to any other region across the Midland areas there. Expected growth of 1.1% and the GVA growth of 0.5%. It's just these sort of statistics and facts which show why it's doing so much better than a lot of other regions in terms of the prosperity and growth in these markets. So what do we want to talk about then regarding Birmingham? So a lot of what we want to understand then is what's going on there, what's it known for, and how is it actually working then in these particular, in terms of further investment and what's growing in the area. Some of the key things straight away are that of the city centre regeneration that we're seeing straight away. You have infrastructure, for example, like the Bull Ring being developed and built in place. We've already mentioned the HS2 rail system, which is really driving that city into the 21st century, which is something that a lot of regions outside of London just haven't had in terms of past investment to assist it to now grow and build to where we're looking at it to be a main powerhouse in the UK for business, for residential factors, but mainly it's about the idea, as we say, about retaining individuals to stay in that market. It's the modernization of these areas, which is really driving people in and assisting that to grow the city. I've just noticed we've had a couple of questions that have come through at the bottom. I've got a colleague of mine who's actually going to jump on and answer some of these questions as we're going through the webinar. But what I'll also do at the end is I'll touch on some of these questions and go through them in a bit more detail as well, at a sort of a one-to-one at the end as we're going through those questions at the end. One last major point I would say that you see in a lot of regions is outside influence coming in and helping to grow and really push what we see as the growing and the demand in a region and in an area. So even hosting things like the Commonwealth Games in Birmingham was such a massive input for infrastructure needing to get put in, extra capital needing to get put into this region to allow it to accommodate that of tourists and guests getting into the city. And also then that's furtherly assisting the name of Birmingham getting out there and the demand for people wanting to be in there and really seeing that city driving and growing over time. And then what we want to talk about then. So as I mentioned, when we look at the idea of a city or a region and really wanting to understand how do we know that an area is going to actually grow? How do we know that a place is going to really push and see a level of further development in a region? So a funny sort of analogy on that for you in terms of how do we see growth? And I had a consultation a few days ago where we were talking about retention rates and growing markets. So a client of mine mentioned that when we look at retention rates and seeing how that affects a town or a city, it's similar to that of like a football team. So if you look at an area like Manchester, for example, and you see how you've got, if you go back to the 90s, early 2000s, most people based in Manchester were Manchester United fans, because that was the team on the up, that were the best team in the world at the time, winning everything, doing everything. Now, that same investor lives in Manchester and mentioned to me how you go through the city now, and all of a sudden what you start seeing is the younger generation wearing blue football kits, being huge Manchester City fans. And what you're noticing is that that's how, in terms of a football team, they grow and expand on their fan base. It's exactly how these cities work as well when we look at these investment locations. So now we're starting to see a growth and development of Birmingham and the better facilities in that market, students wanting to remain in there because larger organizations are moving into the city. In turn, what that means is more people are staying in that area. And then the effect of that is the market then has to naturally grow. People start getting paid more in these markets. So we start seeing more levels of affluence in these regions, which in turn means higher rents, which means more people move into these markets and are able to then buy property. By more people buying property, that then drives the demand for property, meaning that prices start to increase as we move on. Now, what's the reference to that? Back to the education side here. So we have a university here in Birmingham, which is ranked in the top 100 universities in the world. It's part of the prestigious Russell Group. Any of you that don't know that, it's the group that are in charge of places like Oxford, Cambridge, for example. And there's 7 other universities just within the city area. So we're not talking about one singular great university, we're talking about a great university surrounded by 7 other universities, thriving a community of 80,000 students, local and international. Now, we put that into perspective, that's 49% was last year's retention rate in Birmingham. So what does that mean for the area? Well, we're starting to look now, we're looking more like 39,000 students remaining in the city. That's 39 extra professionals needing accommodation, needing work. And that's why you can see organizations moving from London into Birmingham and that demand for further good quality property that we need that attracts that of a young professional tenant. So that's reason number 6. We then have number 5. So what we're going to look at then is looking at the actual regional investment in the area. So when we're looking at what's actually happening in Birmingham, we want to start looking at what is driving that market? What is driving the economy in Birmingham? Well, in the West Midlands, it has over 20% of the UK's automotive production. It's a huge outlet for the automotive industry in the UK. We have massive organizations, for example, Jaguar Land Rover in these sorts of regions. Just outside of Birmingham, you have organizations like Aston Martin with their full production lines. And again, what we're looking for here is professional individuals that need to be in these lines of work to help to boost the economy in the area. We're seeing a 10 billion boost in the economy there for manufacturing. And that all transpires from the last slide about students being in an area. So they need the top quality university to be in. They then need the high quality level of work to go into. That's what's now driving that economy. That's what's pushing people to remain there, to stay there. And as we're starting to see, as we mentioned, the prices to begin to and continually increase from what we're already seeing right now. Okay. You see Birmingham is the recipient of the most direct foreign investment in the UK for the 4th year running. We're not talking about a 1 quarter investment, we're talking about a 1 year investment for 4 years running, having the most direct foreign investment. And we're talking not hundreds of pounds, thousands of pounds, tens of thousands, millions of pounds in support over the last 5 years, really pushing and growing on these regeneration projects that are already in progress. So what I want to start talking about then is actually what's going on there. Okay, so what do these investments look like? So the first one we have straight away is that it's called Paradise City. Okay, so Paradise City is a £700 million investment in the city of Liverpool. It's one of the most important investments in the city, and it's one of the biggest investments we've seen in a generation in the city itself. What we're talking about here isn't just a drive for, as we've mentioned, the business front of the city. We're talking about a different type of investment here, an investment into that of arts, learning, and really pushing this to be one of the most ideal cities for the younger generation to push into. And when we look at Birmingham, recent years, we've seen Birmingham be recorded as the UK City of Culture in the past. And it's just stemming on and pushing from that with further investment. So this investment itself, it comprises of 10 new buildings, 3 new public squares, an ACT hub for events, restaurants, cafes. The project itself begun in 2022 and is continuing on until 2029. Why is that relevant? Because we're seeing active investment right now, but further investment over the coming years as well. What that means for us as investors is people might say, oh, we've seen investment in the past. Well, actually, no, we're still seeing this investment transpiring and going on. And what that's going to lead us to is further levels of growth over the coming years and more position to see better prices in the market, a better quality of living for tenants and residents living in the city. But also, this level of investment has to transpire to start pushing out of the city centre. What we're starting to see now is that levelling up of the outside of the city and that ripple effect now pushing out of the city centre of Liverpool to the surrounding locations. We then have example number 2, which you'll see, which is Birmingham Smithfields. So we've just gone from a £700 million investment to a £1.5 billion project. And this is the development of the southern part, so the southern urban quarter of the city. A 15-year program. So it's not, again, we're not talking about a quick fix in a market. We're talking about the whole regentrification of an area to see how it's going to develop and grow. We've already seen things, for example, with the historic Bullring Market being developed on. We're seeing now new leisure and cultural spaces, including this festival square, which you can see on the screen right now, new landscape parking, huge investment into public transport, and thousands of new homes coming alongside all these community facilities. And I think one thing that anyone in the UK, as an investor who's UK based, will agree on and know straight away, is that across the UK, what we've been seeing for the last few years is a very, very heavy demand for new housing, new property, because of the lack of new build properties we've seen over the last few years. And this is really going to help to impact that and provide more homes in these markets, and again, to drive and really push these markets over the coming years. And what we want to start seeing is strong levels of growth over the foreseeable. And that's really the market we're looking to target with this type of regeneration plan. And then what we have is HS2. So I think HS2 is probably one of the more spoken about investments that you see across the UK at the moment. There's obviously a lot of hesitation about the HS2 as a regeneration plan. One of the best parts about Birmingham as a market is we know that this is already underway. This is already happening. It's on track to be completed between 2030 and 2034. Well, okay, that's well down the line, Scott. Why would that affect me right now? Well, the key here is to remember, we are not in property investment for a quick buck. We're not here to be millionaires overnight. We're looking for the ability that we can see a good level of growth, but also we can see that our market is going to stabilize and remain at a good level of growth for the foreseeable and the ability of pushing forward. The second we start seeing sub 1 hour travel times into the center of London, we're going to see even further spikes and even further demand for people to want to be living in Birmingham, paying rents in Birmingham, who might even have to only commute to London 2 or 3 days a week. Now that we're living in a world of more of a hybrid working culture, it has a huge impact when looking at any of these sorts of things. I think through previous experience, you look at how things like the HS1 rail system between London and Ramsgate had a huge effect on the southeast economy in the UK, particularly, as I said, sort of that Kent region between London through to Ramsgate, and how that affected that level of growth and the demand in that market. We're really looking to see that transpire into this market in exactly the same kind of light. So in terms of Birmingham, what's one of the key reasons that Birmingham is actually pushing and is getting all of this further investment put into the market and into the area? It's down to the business and employment sectors. We're seeing some of the largest organizations in the UK heavily basing their headquarters in that of the Jewellery Quarter in Birmingham, which is one of the largest now business hubs in the UK. You see straight away on the screen there, organizations like Goldman Sachs, HSBC, really, really pushing this type of market. It's having a massive push on sort of the relocation to Birmingham. We're seeing so many more professional individuals that are based in London who want to now move to Birmingham, because what do they get straight away? Similar quality in terms of working facilities. We're getting exactly the same in terms of A-grade office space in Birmingham, but lower cost of living for professionals, equivalent earnings now with a lot of these organizations basing their headquarters in the city of Birmingham, and that huge now demand for rental options. We've seen countless developments and investments in the city, particularly in regions like the Jewellery Quarter, that are tenanting almost instantaneously. And one of the key things that, if you've spoken to myself or one of my colleagues about how we look for a good investment, one of the key things you'll hear us mentioning is the ability to have a turnkey style of investment. Now, what I mean by a turnkey investment is the ability that we can get tenants in, tenants out, and then the next set of tenants in very, very quickly. By having this level of, as one of the key things here is sort of the more in the new build sector of high quality style of property, is that these types of tenants that are committing to move from London to Birmingham get high grade accommodation, 24-hour concierges in buildings, fantastic views across the city. They're similar that they'd be getting in central London for a fraction of the rental price. And that's just driving more of that demand for the young professionals there, as we mentioned, with retention rates and pushing that market. And then what we want to then look at then is now reason 3 in terms of growth in Birmingham. So we're seeing an annual house price growth of 5% in the city of Birmingham. Now, for those of you who maybe don't know, or haven't spoken to us previously, the national average for growth in the UK is around 3%. If we are now pushing to a 5% growth as standard in this kind of market, it's again just going to have even further impact for what we're going to see in the capital growth element of investment. And I think where we are right now in the market, and one of the biggest bits of advice that I'm talking to investors about, and one of the biggest conversations we are having right now is, okay, right now we're in a world of higher interest rates. I think it's one of the biggest conversation starters that myself and my team here are having, as should I invest now because of the fact my interest rate is 5.5, 6, 7%? How do I make this work? When we look at investment, one of the most important things in today's market is to look at it on a capital growth level, because I think it's safe to say you never hear of anyone becoming a millionaire overnight due to rental income alone. But you do hear of people making significant wealth through property when seeing a really good level of capital growth on their investments. What we want to focus on, and one of the key things we're focusing on now when cash flowing and planning strategy, is that of buying with a mortgage or buying in cash initially, with the position then of looking to remortgage over a few years to release funds out, lock in better interest rates at that stage, and then really start pushing for that rental demand as well. But okay, right now, higher interest rates, but what are we still seeing? An annual rental growth in Birmingham of 18%. So an 18% growth just in the rental income. And when we look at the 5-year rental yield forecast, we're looking at a 19.3% yield over 5 years. Now, in terms of markets across the UK and markets across the world, it's very rare to see that level of yielding forecast for a 5-year period, particularly on investments that firstly we can get mortgages on and are on that standard kind of an AST, assured short hold tenancy agreement model, rather than that of HMOs, student lets, for example, that we can see more flexibility when it comes to financing of releasing funds, and again, growing, developing on portfolios, which is one of the keyest things we want to be making sure that we're doing and working with all together. Okay. And then reason 3, we've mentioned there, house prices and rental trends. So what we're seeing right now is in terms of how are rental trends actually increasing in Birmingham as a market. So 1-bed flats now in Birmingham have increased by 38%. We are now seeing 1-bed flats rent for £1,450 per calendar month. Now, again, any investors who are based across the UK or even based in London themselves will look at that and start realizing, well, actually, we are hitting that position now of getting a London quality rent in a market where we're paying a fraction of the price than what we're paying for houses in London. We still look at the average cost of property in Birmingham, and we're seeing a lot of sort of newer apartments coming through around the 200 to 400 mark in terms of purchase price. If we look at that in London, particularly prime central London, we're looking well over 650 upwards to £1 million in terms of purchase price, with not too much of a difference now in terms of actual rent that we can achieve. And that's, again, a massive driving factor for why investors are really pushing for this market, because of the fact we can get good quality tenants that are going to pay on time, working professionals, good quality property in a market we can see is actively having further investment pumped into that region. And then we start talking about the build to rent market. So in terms of the build to rent market, we're seeing there that in cities outside of London, around £2.8 billion accounting for 51% of investment within these regions. This is actually a massive push now because of the demand that is being seen for rental property. As I mentioned previously, one of the keyest things here is that there's such a heavy demand for property. We are so undersupplied at the moment with investment property, well, with rental property across the UK. And it's a huge driving factor now, particularly at a time going back to that of interest rates, where a lot of owner occupiers will not be looking to buy their own homes now for a few years and be looking furtherly into that rental market, that we want to be able to capitalize on that to make sure we're maximizing our ability to get, as we said, good quality tenants in really great markets there. If we look at Birmingham as a market, it's attracted the most investment of all cities outside of London for the second year running. So £380 million of funding, and that's over 1,478 homes just in the city. That was followed by Liverpool with £250 million, and then Manchester at £244 million. So again, what we can see there is it is a market which is getting heavily driven in by outward investment, government-backed investment, overseas investment, as we mentioned previously, stemming that all together to make it one large hub for prime investment property here in the UK. And then what we want to look at then. So when we look at the outlook for some of the strongest cities in the UK, so JLL's big six in terms of price growth in the UK, we've got markets like Birmingham is one of the key markets there, Manchester, Liverpool, Hull, Edinburgh, these types of markets where we're seeing huge levels of investment going into. Now, what we want to make sure we're in the position to do is invest into these markets at the right time. What we're doing with Birmingham is we're getting in at a time where there's active investment and active growth. And if we can get ourselves into a really good quality investment into this area, we can see strong levels of growth backed now with that push and that drive of rental income that is now being achieved in that market. So you're getting pretty much the best of both worlds in terms of a London quality rental market with that of the growth of a secondary city in the UK and the investment of a secondary city in the UK. So what I want to talk about now, whilst we've still got a bit of time on the webinar before we move on to any sort of questions, is a look into what does an investment look like in Birmingham? Okay, what is it? What does it look like? And what sort of properties are we currently working with? So the first one we have here, the first one we have here is a development of ours called Bank Tower 2. So we have high quality building here. We mentioned straight away about the Jewellery Quarter in Birmingham. So we're talking about a region of Birmingham that has had a huge level of corporate style funding. These are the huge banks that we're seeing that have heavily based their HQs in Birmingham. And what we're getting now is that of that high quality luxury style developments and apartments for the type of tenant that we want. So as an investor, the key thing we need to always be focusing on is the quality of tenant we can achieve in a property. It's all well and good being able to look at a region and thinking, I'll just buy the cheapest thing on the market. But sometimes cheapest isn't always best. What we want to make sure we're able to do is push for a property that we can get that strong level of tenanting in there, that turnkey element of the renting. So as I said, tenants in, tenants out, very quick turnaround, and a building that's going to be looked after because we're getting a strong quality, a strong caliber of tenant. So that's the first one there. This is a stock tenanted property right now. We actually have units in this site that are currently tenanted as we speak, providing a rental return. Property number 2, we're now getting more into our new build element of property here. So we can look here at high quality apartments here. Again, fully complete development here. We have a selections of studios, 1 bed and 2 beds. We've actually managed to, well, we're pretty much sold out now of this site. And I think that really shows the demand we've seen here. We've seen a copious amount of these units actively reserved over the last 2 months. One of the real benefits we see with new build property is that of getting building warranties straight away. It's one of the things that I think most of the investors that I work with love about new build property, is that ability that they can have a warranty on the building and not have that stress, particularly for a lot of overseas investors that I know have tuned in today, where if you were going to buy older property or freehold property, where you've got to be very on it in terms of maintenance and really sort of keeping on top of that. I saw a stat the other day that on average, a freehold landlord pays more in maintenance costs per annum than that of an investor who just has a leasehold property and they're paying a service charge. Again, any further questions on any of these things, we will sit down with any investors to talk through them. And what we like to do is do that of a deal recommendation with any investor we're speaking with to really go through and strategize this with you in terms of further in-depth cash flows on these investments. The third investment here. So we are quite big advocates here when looking at markets and different types of markets. So what we've talked about there is Birmingham as a city. We've then talked about some developments in the city and then the city centre itself as these types of markets. One thing that is a real key thing to understand with investment is that of a phrase called the ripple effect, which you see coming from city locations that have had a heavy amount of outward investment. So when we start seeing the ripple effects driving out of these markets, it's to do with the more money we're seeing, billions of pounds being spent in a city. What starts to happen is everyone else wants to jump on there and be part of that. So we start seeing then the development start really sort of stretching out of the city. We start hitting outside towns that we can get into relatively early, but see the track record of investment really pushing to these areas. So straight away, we have an investment here in a region called Solihull. So just on the outer skirts of the city centre, very well connected in terms of to the city centre, to the airport, completing actively this year. One of the key benefits of now off-plan new build property, if most investors aren't aware, is the latest leasehold reforms regarding ground rent and any new developments as of the 1st of July 2022 coming through with that of a peppercorn style ground rent. Now, with a lot of these things, as I say, we will conduct meetings with any investors that want to ask any more questions about what do these leasehold reforms mean, how do they work. At the end of this meeting again today, you can click on a link to my diary and book yourself in and we can discuss it further. But what we start seeing with these types of investments is the ability to get discounts. So really pushing for exclusive discounts on property, ranging from £5,000 up to £14,000 off of some of the purchase prices on some of these units. So certainly ones to be talking about with us. And then just so, to keep things a bit less sort of Birmingham heavy, just on today's meeting and today's webinar, we are also working with other properties across the UK. And we're also seeing some really exclusive offers of investments we've had, even in that of London, where we're seeing markets in London now, again, with that ripple effect coming out of the city centre in a town where, I'll be honest, I wasn't fully aware of this until doing a bit more research into the market. You see a town like Croydon right now, we're seeing a 23% price growth over the next 5 years on an investment in London that's 15, 20 minutes away from London Victoria Station and London Bridge. We have completed development there right now with all apartments currently tenanted, 2 and 3 bedroom properties there. And part of what we can do, again, is get exclusive offers on these. So we've actually got a 2-year guaranteed rental top up of 6%, meaning that we've basically managed to mitigate a heavy amount of investment risk by getting you 2 years worth of rent actually on this property paid upfront to you upon completion. So really exciting opportunities that I think any investors out there that are looking to get more information, certainly drop us a message or get yourself booked in, and we'll certainly go through this in a lot more detail. In terms of next steps, if you're ready to get started, if you're looking at wanting to browse more of the investment properties we're dealing with right now, you'll see the QR code on the screen. Get your phone out, get your camera open, and get yourself open onto our marketplace and start having a good look through. Also on that, my colleague, which you should see in the notes on the meeting, is going to put out my meeting link. Please feel free to click on there, find a time, get yourself booked in, whether it's just to book in for half an hour to ask some questions about the webinar today, whether it's actually, Scott, I really like the webinar, but firstly, I don't even know what I'm going to be doing yet. I need to understand what my strategy is. Book yourself in and we'll start really talking about these things. And whether that's with myself or one of my colleagues, will be more than suited there to actually take you through all of this and start building this strategy so we can start assisting to grow and develop on the portfolios that a lot of investors here are already doing with us here at GetGround. I believe, I'm just checking the time with my with my colleague now. We've hit sort of the time frame now, so I understand if anyone's got to shoot off to finish their lunch, but we can take a couple of questions that I will answer. I believe that some have already been getting answered throughout the presentation. So I'll just hand it over to anyone now who's got any questions for us. First one I have seen is, can we send a link to the marketplace for anyone who's logged in today on their phone? Not a problem at all. We'll get that put in straight away. I think my colleague's just replying that to you now, so you should have that. There's any other questions that we're working with at the moment? Okay, so yeah, really interesting question there by Nicholas. Thanks very much for asking the question there regarding leasehold. What's the downsides of investing in leasehold? What's the positives? What's the negatives of either side, really? So there's not really what I'd say is a right or wrong answer when talking about leasehold or freehold. Now, when we look at leasehold, of course, the first downside you're going to see on a leasehold property is that of longevity. If we need to renew on leases on certain investments, if we're hitting a particular stage on a property where we're getting to the back end of a lease, yeah, it's going to cost you an amount of capital to renew that lease, to extend that lease. Now, what the government has done, which has been a real asset, I think, for any of us as investors or anyone buying their own homes that are leasehold properties, is this new leasehold reform, which is the mitigating of and pretty much the abolishment of ground rent, so that of peppercorn style ground rents, and also that of when talking about service charges on property. And I think this is one of the keyest things we see, probably one of the biggest questions, one of the biggest hindrances for investors about leasehold property. Why do I have to pay a service charge, and how does it get charged to me? So with service charges, first things first, what you'll have to see and what you will see from the freehold of the property is that of a schedule of charges, and it has to transpire to that of what's being spent and proven to be spent on the property and on the building to actually assist with the growing of the value of the property and the maintenance there. It's no longer a case where prices can be made up and just put out as a service charge. They have to be backed and shown. What you'll typically see with a lot of off-plan property, just as a rule of thumb, is you might see that the initial service charge might be slightly higher than what you would expect for that first year. A lot of that is just due to they have to forecast it. They want to make sure they can cover all these costs for the first year. What you'll notice after the first year, if they haven't hit that amount that's needed to be spent, the schedule of charges will be decreased to that level of what it's been costing to actually run the property. So there's a lot more restrictions around it now to protect you as an investor. I would say just the only real negative, just to get back to your question, is the element that it's something you have to pay. Whereas if you're buying something which is freehold, there's no running outward cost. But as we all know, if there is an issue, all the liability comes down to you as the freeholder in terms of any maintenance. The ceiling collapses, the roof caves in, you get Japanese knotweed in the garden, it starts growing through the foundation. That's purely on you. If you have any more questions about that, please feel free, as I said, to just book yourself in, and I'll go through it with you one-to-one, not a problem, and we can answer any further questions. In terms of any sort of costs that are involved, so I've seen a question here from David regarding costs involved with setting up the company with us here and running with us. So with our GetGround company team, what we can do is either get you booked in for a meeting with those guys to really take you through it and get through all the stages with their fully hands-off approach with that. But I'm sure also following up from today, we can send out a brochure and a flyer on that of our company side here and the creation of that, and we get that sent straight to you as well, David. See if there's any other questions I've got coming through here. Oh, okay. So yeah, in terms of any sort of incentives, so yeah, really great question there regarding limited companies and incentives when setting up a company. A lot of it is coming just down to the ability of tax that we're paying. So one of the keyest things straight away is that most investors who are buying property, particularly UK-based investors, will be in higher tax thresholds when in terms of their income. And first thing on that as well is you're not going to want to be paying 40% tax on your rental income coming through. So having it set up in a company means that you're just done on the corporation tax side of things. We then also have the position when it comes to capital gains tax when selling property, and also that of when selling an actual property in a limited company, the individual buying that property actually only has to pay a 0.5% stamp duty on their purchase. This is something that we can actually assist with as well and help with here in terms of purchasing properties already set up in companies. Again, what I'd say is if you're looking down that route, get yourself booked in with myself. If you want to talk more about companies, feel free to book yourself in with me, and I can put you across to one of the company guys as well, who will do all the information on that for you and all the benefits. We've got full presentations on that as well with how that whole structure works. Believe. So we're talking about mortgage rates. I think that when we start talking about mortgage rates and how that's currently working, there's certainly different lenders, and we have certain brokers and lenders that we work with that we can get different kind of rates on. Certainly, we're in a position of getting competitive rates in the market. But what I would say is, going back to what I mentioned earlier about today's strategy and looking at property right now, interest rates is something that I think a lot of us as investors do need to probably, well, really sort of suck it up for the next 2-3 years, but still looking at investments. And this is where we'll strategize with you to get the best quality investments that can, as much as possible, mitigate any higher interest rates on mortgaging, but also focusing on the ability to get a good level of growth on an investment so that in a couple of years' time, when we're looking at remortgaging and our interest rates are dropping back down again, we're going to get the better income and a good position of actually pulling money out of that property through that level of growth that we've seen there. I believe so. In terms of that, now what we'll do is any further questions I believe are getting answered right now by my colleague, who should be responding to any that are left. I can see a few of them getting typed in right now. If any questions do not get answered, or you don't feel like the answer was sufficient, or you want a bit more information, again, please feel free to book yourself into my diary and we'll have a full one-to-one chat together and we'll really go through it all in more detail. But yeah, as for now, thank you very much for everyone who's logged in today and seen the webinar. I hope you found it very useful. One bit of feedback we would really like from today is that of if there's any other locations that anyone is thinking about or thinking to look at that you would like us to do as a next presentation, please feel free to let us know, message in with us, and we will make sure that we're doing that. If not a presentation, mail outs on them, but I'll try and make sure I do another presentation within the next few weeks about another location as well that we can discuss a bit further. Okay, but yeah, for the moment, thank you very much for everyone that's joined in today, and hopefully I'll speak to a few of you on meetings that have been booked in. But yeah, thanks very much, everyone.